Hello everyone, welcome to September Real Estate Market Calgary. I'm Uroš Marković, Real Broker, and here is your September 2025 Real Estate Market Update. We are looking back at what happened in August, and this month number shows a market that's shifting into much more balanced territory. Prices are adjusting, inventory is rising, and buyers finally have more choice. Let's break this down by property type, price range and district so you can see exactly what it means for you. We will start with the overall market review. In August, Calgary recorded 1,989 sales, which is about 9% lower than the same time last year. Sales has definitely slowed from the record highs of the past 4 years, but they are still sitting above long-term historical trends. Demand is there, it is just not as intense as it was. What it really changed is supply. We saw 3,478 new listings, keeping up the sales to new list ratio below 60%. Inventory climbed to 6,661 units, the highest level in August since 2019. That extra choice for buyers has pushed the months of supply to 3.4 months. That is much higher than the stronger sellers market conditions we have seen recently, though it is still below true buyers market conditions that we had pre-pandemic. As a result, the total residential benchmark price fell to $577,200, which is down from the last month, 4% lower than the last year. Detached sales came in at 995 units, down slightly from the last year. New listings jumped to 1,774 units, bringing inventory to just over 3,000 homes, the highest for August since 2020. The benchmark price for detached home was $755,600, nearly 1% lower month over month and year over year. But here is the key. Not every district is moving the same way. Northeast and East districts are now in a buyer's market territory, with prices down around 5% year over year. Meanwhile, city center is still reporting growth, with prices up more than 2% from the last year. Semi-detached homes hold up better. Sales actually improved year over year in August, hitting 206 units, and new listings slowed compared to sales. That helped keep months of supply under 3 months, which is still supportive of prices. The benchmark price came in at $687,200. That is down slightly from July, but still up nearly 1% compared to the last year. Year to date, semis are about 4% higher than in 2024. The strongest price growth is happening in the city center, while the biggest decline remain in the Northeast, East and North districts. Alright, now let's shift to raw townhouses. Raw homes are under pressure. Sales slipped again in August, part of a year-to-date decline of 16%. Inventory levels reached 1,103 units, which is the second highest August ever recorded, just behind 2018. That extra supply has caused prices to slide. The benchmark price for a raw townhouses is now $439,600, which is down 5% year over year and making the fourth straight monthly decline. District level detail shows the steepest drop over 5% in Northeast, North, South and East area, all of which are competing heavily with new home supply. And last but not least important, apartment condos. Apartment condos are seeing the sharpest adjustment. Sales were just 449 units in August, down 26% from the last year, and year-to-date activity is off nearly 30%. With 877 new listings last month and almost 2,000 units in inventory, August marked the highest condo inventory on record for this month. The sales to new list ratio is sitting at 51%, and months of supply are hovering around 4.4 months. All of this is waiting on prices. The benchmark price dropped to $327,500, down 6% from the last year, and making the fifth consecutive monthly decline. In some districts, like the Northeast, condo prices are down even 11%. Now let's zoom out by districts. City center, holding strong with detached and semi-detached prices up about 2 to 4%. Apartments are still down almost 5%. Northeast and East, the weakest parts of the market. Detached and row homes are down about 5% and condos down between 9 and 11%. North and Northwest, more balanced, though prices are easing. Detached around 675,000 to 794,000 depend on the community. South and Southeast still relatively balanced with modest price declines. Detached in a Southeast is about 717,000, down a little over 2% from the last year. West is one of the strongest districts, with Detached at nearly 976,000 and only small year-over-year declines. So, what does this all mean? Buyers finally have more leverage after years of intense competition. You will see longer days on the market, up to 38 days on average compared to 27 days a year ago. You will also notice more price flexibility, especially in the higher density product types. For sellers, it is important to price strategically and stand out with a strong marketing because buyers now have more options than they did a year ago. Bottom line, Calgary is moving into more balanced market. Detached and semi-detached homes remain relatively resilient, while condos and row homes are adjusting more sharply due to higher supply. I'll be watching closely as we move into fall, traditionally a busier season. If you're thinking about buying or selling, the strategy really depends on your property type and location. If you would like a personalized breakdown for your community, or you're curious about what your homes is worth in today's market, reach out anytime. I'm always here to provide clarity and a plan. Thank you for watching, and I will see you in the next month's update.